Hello friends, this is Victor here. Welcome back to the Intelligent Investor channel. In today's video, I'm going to talk about when to sell stocks and just as importantly, when not to sell stocks. So why am I making this video? There are two main reasons. First, stocks have recovered a lot recently, and second, there are still many macro headwinds that are impacting the market right now. At the time of making this video, the market has recovered a lot recently, and now you can see that the market is neutral again. Just about a month ago, the overall market was extremely fearful. At one point, the market's fear and greed index reached as low as 4 because of Donald Trump's trade war. Now it has returned to neutral again. Here you can see that the S&P 500 is near its all-time high again. However, many investors have started selling stocks recently because there are several macro headwinds that are still ongoing. As you may already know, the market always finds something to worry about. For example, Trump's trade war and reciprocal tariffs are still ongoing. Trump's trade deals with China, the EU, and many countries seem to have slowed down or even stopped recently. Trump will likely need to extend his reciprocal tariffs deadlines for many countries going forward. And second, the Israel and Iran conflict is still ongoing, and it doesn't seem to be de-escalating anytime soon. Many investors are concerned that this conflict may eventually get the US involved, cause commodity prices to go up even further, and cause the overall market to drop more. Or worse, many people speculate that if the US is involved in this conflict, it may cause a World War III. Of course, this is pure speculation. Now, considering all the macro headwinds we're facing right now, I think it's more important than ever to understand when to sell stocks as well as when not to sell stocks. So in this video, I'm going to cover these three main topics. I will discuss why the favorite holding period should be forever, when to sell stocks, and when not to sell stocks. If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis videos every week that will help you become a great investor. Each video usually takes me more than 30 hours to make, so if you like this channel and want to support it, check out my Patreon blog in the video description. Our goal is to help all our members become multi-millionaires through investing. Once you become a premium member, you can follow all the stocks I'm investing for the long term, follow my personal stock portfolios, and download the latest intrinsic valuation models for all the stocks I'm analyzing, so you'll know when a company becomes undervalued, fairly valued, or overvalued now. Also, you will have access to all my latest stock ratings for all the stocks I'm analyzing. The link is in the video description. Take a look. Let's start. If you're a long-term investor, you may wonder, why is the best holding period forever? Why holding a stock for many years or even decades is much better than trading stocks and timing the market? Buffett wrote this excerpt when he invested in Freddie Mac and Coca-Cola back in 1988. He wrote, "In 1988, we made major purchase of federal home loan mortgage, Freddie Mac and Coca-Cola. We expect to hold these securities for a long time. In fact, when we own portions of outstanding businesses with outstanding management, our favorite holding period is forever. We're just the opposite of those who hurry to sell and book profits when companies perform well, but who tenaciously hang on to businesses that disappoint." Peter Lynch aptly likens such behavior to cutting the flowers and watering the weeds. Our holdings of Freddie Mac are the maximum allowed by law and are extensively described by Charlie in his letter. To be fair, Buffett did not hold Fannie Mae and Freddie Mac forever. He owned both companies for many years, but he sold his positions well before the 2008 financial crisis. Based on what I know, he still made billions in realized profits. Buffett decided to sell because he lost trust in their management. He realized that both companies were taking too much risk, buying high-yield, non-conforming mortgage-backed securities to increase their short-term quarterly profits. In this case, it made sense for him to sell Fannie Mae and Freddie Mac. As you may already know, Fannie Mae and Freddie Mac ended up collapsing during the 2008 financial crisis. Here's a great example of why the best holding period is forever. Coca-Cola is one of Buffett's most successful investments. He started buying shares in 1988, investing about $1.3 billion in the company. Now fast forward to today, his Coca-Cola holding is worth around $25 billion, resulting in a return of nearly 2,000 gains since 1988. But that's not all. Coca-Cola also pays consistent and growing dividends almost every year. At the time of making this video, Coca-Cola's annual dividend is $2.04 per share. Since Berkshire Hathaway owns around 400 million shares, this means Buffett is getting paid $816 million in annual dividends every year just from Coca-Cola without doing anything. And all these annual dividends are on top of the 2,000% gain. This is why Buffett said our favorite holding period is forever. Let me give you a personal example. This is from my investment accounts. I have other investment accounts that have almost the same stocks and the same investing strategy as this account. Here, you can see that I have several large multi-bagger stocks, including MasterCard, Microsoft, Visa, Amazon, TSMC, and Meta. NVDA is a new position in this account. I just bought NVDA in this account several months ago. I expect all these outstanding companies will continue to grow exponentially and earn much higher earnings over time. My plan is to hold them forever as long as there are still outstanding businesses that dominate their markets. Based on my experience investing for many years, holding the best high-quality companies forever is one of the best investing strategies because you don't need to do anything. You just need to find the best companies to invest in, keep buying their shares whenever they're undervalued, ignore all the market noise, and be patient enough to hold them for many years so that they can become very large multi-bagger stocks in the long run and pay you dividends at the same time. Now, I would like to talk about when to sell stocks. Generally speaking, there are several scenarios where it might make sense to sell stocks. First, you have found a much better investment to reinvest your capital. Second, you realize that you made a mistake in your original investment thesis. This is a very common investing mistake. Third, you no longer trust the company's CEO or the company's business fundamentals are deteriorating. Fourth, you need to sell stocks because of personal financial reasons or you really need the money. The first reason is the most important one. I believe it makes sense to sell stocks if you have found something that's much better to reinvest your capital. Investing is about allocating your capital to the best investment opportunity that can produce the highest return possible without taking too much risk. For example, if you found a company that's much stronger with much better fundamentals, higher growth potential, much better long-term prospects, and lower valuation, then it makes sense to sell your stock and reinvest your capital in the much better investment opportunity. For example, several months ago, I sold most of my Apple shares because I found much better investment opportunities elsewhere. I've actually sold Apple shares many times across different accounts. In this account, my Apple holding was up over 1,100% when I sold it. Then I reinvested the capital into NVDA, Google, Meta, Amazon, and other outstanding companies that have strong fundamentals and much higher earnings potential going forward. Ideally, I would not have sold Apple if I had extra cash, but since I needed the funds to invest in other outstanding companies that have much higher expected growth rates, I made the decision to sell most of my Apple shares. I think it was the right decision. In this account, I used the proceeds and bought a lot more NVIDIA shares and Meta shares when they were much more undervalued. Recently, the market has recovered a lot from Trump's trade war, so all these outstanding companies have recovered a lot and have made large gains. If I held onto my Apple shares, the gains would be much smaller. However, I bought back some Apple shares recently since I believe it's still slightly undervalued. Here is another good reason to sell a stock. If you realize that you made a mistake in your investment thesis, then it makes sense to sell the stock, take the loss, and reinvest the proceeds in better businesses. When you're back holding a stock where the business is declining or it's not improving much, it may take years for it to recover, or it may not recover at all. At this point, you're just hoping the business to turn around, which may never happen. Based on my experience investing for many years, it's usually much better to cut your losses than holding onto a mediocre company. More often than not, it's much better reinvesting your capital into stronger businesses that have much higher earnings potential. Let me give you an example here. I used to own PayPal for several years. I actually sold PayPal shares many times before and made some gains. At first, I kept buying PayPal because it was the most undervalued growth stock I could find. But then I eventually realized my initial investment thesis was wrong. PayPal's business was not getting any better anytime soon. In fact, PayPal has been facing too much competition in recent years. For example, here you can see that PayPal has many major competitors including Stripe, Payoneer, Square, Shopify, Venmo, Amazon Pay, Google Pay, and Apple Pay. I realized that PayPal no longer had any competitive moats. It's no longer a great business. PayPal's growth has slowed down significantly in recent years because of too much competition. PayPal's margins have also decreased a lot in recent years. This is why you can see PayPal stock has declined significantly since its peak during the pandemic in 2021. Back then, I realized that I had two options. First, I could keep back holding PayPal stock, but it would likely take many years to recover, or it would continue underperforming because of too much competition in the online payment processing market. The second option was this: I could sell PayPal at a loss and reinvest the capital into a much stronger business. I eventually chose the second option. In this account, I sold PayPal at a loss last year and used the proceeds to buy NVDA. The good thing was that PayPal was a very small position and it was around 1% of the portfolio, and NVIDIA was undervalued during that time. As you may already know, NVIDIA is the most profitable and dominant AI chip company in the world. It has a near monopoly in the AI data center market. More importantly, NVIDIA is expected to grow at high double-digit growth rates over the next several years because the largest hyperscale cloud providers and the largest enterprises are expected to continue increasing their investments in AI infrastructure. Looking back, I believe I made the right decision, selling my PayPal shares and buying more NVIDIA shares because NVIDIA is simply a much stronger business with much higher earnings potential. Here's the third reason to sell a stock. I believe it's time to sell if you know the company's outlook has changed. For example, the company you're investing in is no longer a great business, or the business fundamental is getting worse and is not improving anytime soon, or you no longer trust the company's CEO. If you have been following my channel for a while, you may remember that I used to be very bullish on Tesla stock for many years, mainly because Tesla used to dominate the EV market in the US, Europe, and China. Last year, I decided to sell Tesla stock. Then I reinvested most of the proceeds into Nvidia because I realized that Tesla's fundamentals have declined significantly over the past several years. More importantly, the company is facing too much competition in the EV market. Tesla is no longer as competitive as before in the EV market. Chinese EV makers such as BYD can often make EVs that are much cheaper at lower cost than Tesla's EVs. Tesla's vehicle delivery and revenue growth have slowed down significantly in recent years, mainly because Tesla is facing too much competition in the EV market, especially in China. Tesla's EV business essentially peaked in 2022 when it had the highest gross margin, and operating income. After 2022, Tesla's growth has slowed down significantly while its operating income, gross margin, and operating margin have also declined significantly during the same period. I decided to sell Tesla stock last year because I believe Tesla's EV business will continue to have very low margins and low sales growth going forward. There is too much competition in the EV market. At the time making this video, I believe Tesla still has a demand problem. This is why Tesla often needs to lower EV prices, give more incentives to buyers, and offer very low interest rates to increase EV demand and sales. Let's consider this. If Tesla's demand is high, why would Tesla keep offering incentives and very low interest rates to customers? Here's another reason I decided to sell Tesla stock. I want Tesla to succeed, but I don't trust Elon Musk's management style anymore. The best CEOs usually don't overhype their companies and make huge claims about their companies becoming the most valuable in the world. For example, Tim Cook of Apple, Jensen Huang of NVIDIA, Satya Nadella of Microsoft don't make huge claims and predictions that they will make their companies the most valuable in the world. They just focus on their businesses and consistently lead their companies to dominate their industries. I don't want to criticize Elon's leadership style, but Elon has been overhyping Tesla for quite some time already. Elon often tells investors that Tesla will likely become the most valuable company in the world, even more valuable than the top 5 companies combined. He has also claimed that full self-driving or robotaxi will likely make Tesla a $5 trillion company, and the Optimus robot will make Tesla a $25 trillion company. This huge claim is a huge red flag for me. Elon is essentially overhyping Tesla's future products that have not been released to the public yet.
Autonomy, like the sort of robotic taxis, makes Tesla kind of like about a $5 trillion company. The Optimus robot, I think, makes Tesla a $25 trillion company. It's not even clear what money means in the future.
Elon also said this during the most recent earnings call. He basically said that the future of Tesla will be entirely dependent on large-scale robotaxi and humanoid robots. This means Tesla's main value is not its current EV business. Tesla's main value is its upcoming robotaxi service and humanoid bots.
The future of the company is fundamentally based on large-scale autonomous cars and large-scale, in large volume, vast numbers of autonomous humanoid robots. The value of a company that makes truly useful autonomous humanoid robots and autonomous useful vehicles at scale, at low cost, which is what Tesla's going to do, is staggering. I continue to believe that Tesla, with excellent execution, will be the most valuable company in the world by far. So that's an important if. We must execute well. But if we do execute well, I think Tesla will be the most valuable company in the world by far. It may be as valuable as the next 5 companies combined. But there'll be a few bumps along the road before that happens. I said, I think on the last earnings call, that we'll start to see the prosperity of autonomy take effect in a material way around the middle of next year. We still expect to be selling fully autonomous rides in June in Austin, as we've been saying for now several months. So that's continued. But the real question from a financial standpoint is, when does it really become material and affect the bottom line of the company, and start to be a fundamental part of the when does it move the financial needle in a significant way? That's probably around the middle of next year, second half of next year. And then once it does start to move the financial needle in a significant way, it will really go exponential from there.
This is my plan right now. I prefer to own NVIDIA much more than Tesla because NVIDIA is a much better business than Tesla. NVIDIA's total addressable market or TAM is also much larger than Tesla. If Elon is right about Tesla's upcoming robotaxi service, I will buy back Tesla stock if Tesla drops below its fair value around $256 per share. And if Tesla's robotaxi service and humanoid bots succeed, NVIDIA will also benefit a lot because Tesla will need to buy many more AI accelerators and AI systems from NVIDIA every year to train robotaxi and autonomous humanoid bots. Moreover, other companies will likely need to buy large clusters of AI systems from NVIDIA because they will need to train their own robotaxi and humanoid bots to better compete with Tesla. Many investors do not know this. NVIDIA's business model is much better and more profitable than Tesla because NVIDIA sells the picks and shovels that allow other companies build their AI models, AI applications, AI agents, AI infrastructure, robotaxi, and humanoid bots. The fourth reason to sell the stock is when you need the money. For example, if you're retiring soon, then it makes sense to sell stocks and keep more in cash or bonds. Also, unexpected things can happen in life, so if you have used up all your emergency funds and you really need the money now, then it makes sense to sell some of your stocks. Another good reason to sell a stock is when the market is extremely greedy and overvalued. Then it may make sense to sell some stocks so that you can keep more cash in your portfolio. Once the market dips, then you can actually reinvest your cash to buy more undervalued stocks. Now let's talk about when not to sell stocks. There are several scenarios. The first scenario is this: the stock has gone up. There's an old saying, no one ever went broke taking a profit. But in reality, this is the worst investment advice out there. It makes investors focus on short-term trading instead of long-term investing. In most cases, if you sell a great company just for a quick gain, it's often very difficult to buy back at the same price or a lower price. And if it's truly an outstanding business, selling early does not make any sense. The best companies always grow their earnings significantly over time. For example, if you had simply bought and held Amazon, Microsoft, Google, Meta, Costco, or Walmart for many years, your total returns would have been much larger than trying to lock in small gains every time the stock goes up slightly. If you're a long-term investor and you want to have many large multi-bagger stocks in your portfolio, you have to invest for the long term and be patient enough to wait for the company to grow exponentially over time. Peter Lynch, who is one of the best fund managers in history, said that his biggest investment mistake was that he always sold stocks way too early. He said, selling your winners and holding your losers is like cutting the flowers and watering the weeds. Selling his winners is his greatest investing mistake. I've made many investment mistakes before. Just like Peter Lynch, my biggest investment mistake has been selling my winners way too early while keeping my losers for too long. I actually bought many outstanding companies at much lower prices before. For example, I invested in Mercado Libre, Meta, Broadcom, NVDA, Intuit Inc., Booking Holdings, S&P Global, American Express, and many other outstanding companies. But then I often sold them for quick profits. Looking back, if I had just held on to them, my portfolios would be much larger by now, and I would have many more large multi-bagger stocks. In fact, I often ended up buying back the same stocks later on at much higher prices. Here's the second scenario where selling a stock doesn't make sense. The stock has gone down. It makes sense to sell a stock even at a loss if it's no longer a great business or if you don't trust the CEO anymore. However, it does not make sense to sell a stock if business fundamentals have not changed, or the business is still doing well, or you know the company still has great long-term growth prospects. Many investors do not fully understand this. The stock price and price actions don't tell us anything about the business. Short-term price movements are mainly driven by investor sentiment. However, the stock price is mainly driven by business fundamentals and earnings the most in the long run. Even if the stock is down right now, it will eventually recover and reach new highs again as long as the underlying business fundamental is strong and the company continues to earn high earnings in the long run. Let me give you an example. Over the past few months and last year, I told all my Patreon members that NVIDIA was greatly undervalued whenever it dipped below its fair value. Over the past 12 months, you can see that NVIDIA had several large dips because of several temporary headwinds. These temporary headwinds include the Blackwell delay, the DeepSeek fear, uncertainty, and doubt, the chip export restrictions that limited NVIDIA's ability to sell H20 AI chips to China, and of course the recent trade war. I knew all these headwinds were just temporary. NVIDIA's business fundamentals did not change at all, and its long-term growth prospects in the AI data center market remains very strong. This is why I took advantage of these large dips and I bought more NVIDIA shares while it was below its fair value. As long as the company's fundamentals have not changed at all, and the company still has great long-term growth prospects, the stock will eventually recover and reach new highs because of strong fundamentals and higher earnings in the long run. Here is another reason that we should not sell a stock. It's impossible to time the market and predict every macro headwind. No one knows what the market will do tomorrow, next week, next month, or even next year. If we constantly follow the latest predictions and commentary from Wall Street analysts and economists, we will underperform the market by a lot because we will miss out on many great buying the dip opportunities. The market always finds something to worry about. If you're a long-term investor, I believe the best investing strategy is to stay invested. Focus on the highest quality companies you understand very well. Invest for the long term and only buy shares when they're fairly priced or undervalued. Then have diamond hands and hold your best stocks for the long term, so your portfolio will grow much more over time. The US equity market always recovers and reaches new highs in the long run. I always say this, The market always finds something to worry about. It's impossible to predict the market. Over the past 5 years, you can see that there were many macro headwinds. For example, the US aggressive rate hikes in 2022, the Russia-Ukraine war, the Gaza-Israel war, the yen carry trade, Trump's trade war, and now the Israel-Iran conflict. It's impossible to predict all these macro headwinds. If you try to time the market and predict all these macro headwinds, you will likely miss out on many buying the dip opportunities. Or worse, if you try to time the market and predict the next macro headwind, you may end up selling your stocks way too early and only to see the market recover much more later on. In my view, it's best to stay invested and be patient enough to hold through all these macro headwinds. The market as a whole, as represented by the S&P 500, always recovers and reaches new highs in the long run. Now, all these are only my opinions and my analysis that's based on my research. They are not financial advice. There are always risks associated with investing. It's very important to invest in what you know and not speculate. You will need to do your own research and do your extra due diligence first before investing in anything. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.